Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today, we have James Kandasamy. James has syndicated over 2,000 units, over 10 apartment complexes worth over $160 million. So thanks so much for being on the show, James.
Hey, Charles, nice to be on your show and happy to add value wherever I can.
So James is out of Austin, Texas. And James, give us a little of your background prior to starting your current business, Achieve.
I'm an engineer with an MBA, and now I have a CCIM as well, which is a certified commercial investment member. Just from an engineer, moved on to a real estate business full time. Right now, we are general partners, and we raise money from private investors for apartment complexes.
Okay, awesome. So why did you choose real estate as your investment vehicle when you started?
So I started doing trying to do business because, there's a lot of ways to make money in the US, right? So we started doing startup business and we failed on that. And then after that, I tried the stock market, right? I thought, hey, it's easy, right? Stock market, right? It's well known around the world. How smart would it be? It's the biggest puzzle in the world. And I tried to solve that, and I also failed miserably because no matter what the numbers I put in, I'm a numbers guy. I like to put in numbers and try to play the charts and try to buy and sell and signal. The stock market really play with your emotion, and emotion is something you can never put in numbers, right? And with the technology nowadays, you can look at the stock fluctuation every second, right? And that never give me peace, right? So my emotion, fear of greed, people say fear and greed is what controls you in the stock market for people who are like swing traders. I'm trying to do swing trading. And I failed miserably on that. Then I realized, then I met someone, who was doing rentals, like single family rentals. Maybe, that's a bit slow and all that. So when I talked about it further, I found out that, hey, it's pretty good, slow and steady game. And it suits my personality very well because, we want a slower investment, but we want to be in control. Like stock market, there's no control, right? You buy something and that's it, you pray, right? You pray it goes up, right? So, and my wife likes it too. She likes to remodel houses. She likes to, make the, things, rehab the houses, make it look nice. So it's a very well matched business with our personality, right? So having said that, no investment is bad. Every investment is good as long as you master it and it matches your personality, right? Obviously, there's a certain advantage in real estate that doesn't exist anywhere else, like the tax benefit, the leverage that you can put in. You can take a mortgage. You can also buy below value. Like stock market, you can never buy below value, right? Whatever value that show you right now, that's the value you're buying, right? But real estate is not like that. Real estate, you can always buy below market value. If you buy a distressed asset, you're buying below market value. You can go and buy directly from the seller. So it's a one-to-one, no middleman transaction in real estate. Whereas stock market, you have to go to 3D trade, E-Trade, all kind of middlemen, and you pay a lot of fees. I mean, of course, the fees sounds very small, but that's a lot of fees, right? Billions of dollars when so many people are doing it. And you got no control in the stock market, right? Whereas real estate, you can control. You can decide on what kind of kitchen countertop you want to put in. Yeah, you can decide which house to buy. So there's a lot of decision that's all owned by us, owned by the business owner, and that makes a lot of difference for us, right? So, and real estate is everywhere, right? If you can look around, there's houses everywhere, right? So that's why we chose real estate. It's very matching to our personality. It has a lot of benefits in terms of investment, and we want to be in control of our investment, right? So that's why we chose real estate.
So tell us a little bit about your first couple real estate deals.
First couple, we bought houses on rentals, and let me think. House rentals. We had like 13 houses in the beginning for 2 years, and then we buy all distress and we remodel them and we rent it out. A strategy called BRR, right? Buy, rehab, refinance, and rent as well, right? Buy, rehab, rent, and refinance, right? So I need to make sure all the R's are correct. So we did that, and then we pulled out a lot of equity when we refinance. But that's where we got started. And after that, our first multifamily is basically the 45 units that we have.
Okay. Awesome. So with your current company right now, Achieve Investment Group, what is your investment strategy and your criteria when you're looking at deals?
We like to buy things at a discount. We don't go for every deal. We do not go for cash on day one because I mean, there's a lot of people who buys that, right? So we like to go for a deal with a story, right? What is the story? Is there a distress story? Is there, some hair on the deal that I can buy it at a good price? Because for me, it's all about risk management, right? Buying another deal which is cash flowing in day one and bidding with 10, 15 people or 20, 30 people, we don't do that because that's a normal process, right? I like to really go and buy deals which other people don't get, and that gives me a lot of satisfaction, right? The last deal we recently closed 3 weeks ago is a forbearance deal,
Mm.
right? So that's the only forbearance deal that I know that someone has closed. So that feels good for me because I got it at a really good price, really good basis. And not many people can do that, right? People don't touch this kind of deal because it's in a distress situation, you're buying it, how you're turning it around and all that. That makes a lot of difference in terms of your long-term vision and what gives you satisfaction. So that's where I like to buy that kind of deals, which has a lot of meat on the bone, a lot of value add, and it just reduces your risk in investment, right? So
Yeah.
so that are the types of deals that I like to look for.
Yeah, it's definitely an imperfect market. And that's the thing I love about real estate too, is that when you're buying stocks, it's perfect market, right?
Yeah,
So what the
absolutely.
value is, and that's a problem when you're trying to get a discount on it. So the thing is that when buying real estate, you talk a lot about the off-market deal sourcing. And it's something that I agree with fully. Every time I speak to syndicators and mention this, they always say it's a waste of time on larger deals, even though we have found multifamily deals 40 plus through just direct mail, right? Can you give us an overview of how you source off-market deals, maybe with that previous property that you were last talking about, how you found it?
Yeah, that was found as an off-market through a broker, but
Mhm.
there was many brokers looking at it, right? But this was an off-market through a broker, but they need to find the right buyer who's willing to do a loan assumption, who's willing to buy it very quickly because there's so many people looking at it, and we put that deal under contract in 3 days from the day I got the news. Today I got the news, tomorrow I drove it, the next day we put it under contract. That's it. And they need people like that who people can assess very quickly and move on it, right? I mean, there were a lot of other people looking at it, but they were like, yeah, I want to do this, I want to underwrite, I want to look at this, I want to look at that, I do not know, I'm not sure, kind of thing, right? So it's just people who knows exactly what's their plan and who are local operators, who can estimate rehab costs just by driving around,
Who can close?
who can close to. And we closed that deal, that's a loan assumption deal, in 50 days, which is crazy, right? So loan assumption takes a lot of time.
Yeah.
And that is just one example of deals which is not everyone can do it. At the same time, you're the right buyer and you move on it quickly, right? We found a lot of off-market deals, as what you said, 40 plus units, you found through direct marketing. And it's for the people who are aggressive and active, who want to buy really good deals, right? I mean, if you want to be the normal guys, you can go and do bidding and buy it, right? So we found a lot of deals through our direct marketing as well. Like the first 45 units we found through our text blasting and yellow letter marketing.
There you go.
And after that, we bought another 174 units through the same method. And we basically bought that at a really good basis. I mean, of course, it's a lot of work,
Yeah.
but that's where you make the money, right? So
Yeah.
it's,
Yeah.
it's an imperfect market, right?
Yeah.
That's where you make the money, right?
Well, that's why you have you have your limited partners, your passive investors that are coming to you because they want to buy properties. They want to invest in properties that are at a discount, right?
Yeah, and
Anybody,
also
yeah,
they want to invest with someone special, right? If you
right.
claim you are a syndicator and you know all the skills, what is special with you compared to them buying themselves, right? I mean, they can go to a bidding war and buy it themselves too,
Yeah.
right? If they want, right? But if you are a special guy, a special syndicator who can turn around properties, and you are the only one, not say you are the only one, you are one of the very few who can find this kind of deals.
Mhm.
They know they got no choice of investing with you, right?
Yeah.
So go ahead.
So, what marketing channels do you utilize? You said text blasting. What other ones
I
do
use
you
text
like using?
blasting, yellow letter marketing, cold calling as well. We try all methods. It becomes harder as you go bigger, 200 plus units, but I would say it still works. You just have to do a lot more of it, right? And I think a time invested versus return of investment, return of time doing that method is much higher compared to you go and looking at 100 deals, which is email blasted to everyone, and you go through a you go through a bidding war, and then you win the war, but you're probably the most overpaying guy there, right? Yeah, I won. I got a deal. I tell everyone, but hey, you know what? I paid the most. So I think the return of investment of looking for off-market deals is much, much, much higher.
Yeah, I find that all the time too. I just find that it's a much longer time frame. The larger the property, usually the longer the time frame I have from the time that I initiate contact to the time that I'm actually getting into contract, initiate contact to the time you're getting to a contract. Do you outsource any part of the process? You mentioned cold calling, which can be pretty time intensive.
Right now, I have some VAs doing it. In the beginning, I was doing it myself. Even though I'm still doing all that, it's just like maybe like 10-20% of my overall effort. I usually wait for deals to come to me because usually brokers knows me and they know some deals not everyone can do, right? So I'm not really rushing to buy deals every month or every 2 months, right? I know there's so much capital out there, there's so many people doing deals, but I rather do deals which I really really like, which I think there's low risk, difficult, compared to just keep on doing deals just because people are willing to throw money to you, right?
Yeah, and you're generating just acquisition fees that the syndicators are living off of.
There's so many of them out there, right? Yeah. I mean, we are at the peak of the market. I mean, of course, with COVID, everything come down, but multifamily didn't really didn't crash. So people think multifamily is still a very good investment. It is a very good investment, but they are also distressed in the market, which people are not talking about, right? So we are in a recession period right now, no doubt about that. And I think it's a wrong strategy to buy aggressively at this stage. And if you buy, you should buy a recession-priced asset, not the normal bidding war asset, right? So
25 bids on it and you won it, right?
Yeah, I know. And they do a best and final, and they do best and final, and then they say day one hard money, and then there's 500,000, $1 million day one hard money. I mean, it's all. I mean, it's nothing wrong with that. It's just that I think it's very high risk.
Yeah, it's extremely high risk, and it's one of the things is that when you're doing that, one of the best things about when you're doing it off market, even if you're not getting a huge discount on price, you're in the situation where possibly you're the only person that's putting in an LOI with that seller at that moment. So it's not the push where, oh, you got to go hard like this weekend and you've got to do this and you've got to do that and all this kind of stuff. And you give it, I think you have to know quick, like you said, you got that deal because you were able to go on contract in 3 days and the brokers knew that. But it's also one of the things too, is you hopefully are avoiding any type of bidding war so that you really have the seller and the seller's agent to yourself.
Yeah. I mean, bidding war, and the other thing is you're avoiding like day one hard money, right? I mean, there's a lot of people who found issues on the property after day one hard money and they cannot do anything. They have to just keep on closing, like hoping that whatever they found can be forgiven by the market later on, right? It's very hard to know everything about the property when you're under time pressure and you're already locked in because of day one hard money.
Yeah, I mean, you have to be able to. You're doing very very in-depth underwriting, be in due diligence prior to even putting in, putting it in. So I don't know. That's not what normal people do. I think they're just writing in, some percentage that they know that something's going to go wrong. And they just have to do it just so they can generate some acquisition fees, which is not the best way, I feel, for investing in real estate.
Yeah, there's so much of hype on syndication and multifamily and all that. People, spend a lot of money going mentoring program and, telling everyone, the whole world, they're doing this. And now they're under the gun of doing a deal. And every day pass by without doing a deal, they feel like they're missing out, right? So sometimes they take the jump off the cliff to take some, deal, even though it's risky, their mind's already set. This is the deal. I already got it. I don't want to lose this, right? Because I already waited 1 year, right? And I told the whole world that I'm doing multifamily, right? So it's a very tricky situation. I always advise, I mean, I have some of my students as well. I've advised them, don't worry about, looking at other people closing deal or what. I mean, take your time. The first deal you do, if you do a really, really good deal, that's going to launch your career into a very high level. Yeah. Right. Just be careful. I mean, as I said, this is a recessionary period. Don't be aggressive, stay patient.
Yeah, stay patient. That's definitely it. What is when you're doing all your text messaging stuff, what is the usual time frame? Like I said, it's a pretty long process, some of them going over a year. what to the when you begin contacting and speaking and someone's actually interested in listening to you, or they're returning your text message or your call, to the time that you're going under contract, I mean, for these larger assets, because I think most people are used to doing it on smaller assets, so it's a much quicker, like, if you're wholesaling properties, you're direct mailing, you're getting someone that's very motivated, because you targeted them on a list. What about for the multifamily? So if someone's doing this, what can they expect month wise, years wise?
I think every 3 months, 6 months once is good. The key thing is to at least build a repo, right? So, sometimes people have smaller deals, but they also have smaller deals and bigger deals. But you might be just targeted them to that smaller deal. So the key is to find someone who likes you, who want to help you. And there are a lot of people who out there, they see someone, when you build that repo, they really want to help you out, right? So they don't mind sending a small a deal which is small, as long as you know what you're talking about, right? They do not want to deal with someone multi-million-dollar deal, and this guy is like, out of the boot camp and doesn't know what he's talking about, or is too new, right? So you have to do your due diligence. You have to be really, really ready to take down even a small 50-unit deal, right? So once you know the lingo, once you know what you're talking about, then you do a 50-unit deal, and the seller might say, hey, actually I have a 200-unit deal too, right? Do you want to do it? And the first experience can make a lot of difference if they really see that you're making the whole thing smooth. As I said, the person who are doing, even for a small deal, you have to be really, really ready. You have to know your financing, you have to know your team, you have to know how to underwrite, you have to say what is yes for what and what is no for what, right? In terms of negotiation with the seller. So he knows, the seller will know that you know what you're talking about, at least to a certain level, right? And that's where you get into the bigger deals, right? For the larger ones, it's a bit more tricky, but as I say, that's what brokers do, right? Brokers do look for bigger deals for them to sell through marketing, right? The brokers doesn't pop up from somewhere and they start doing, millions of deals. Right? They also do the hard work of connecting through sellers. They have that luxury of being a third party, saying that I'm gonna be on your side rather than just like I want to buy your deal, right? Which is a more, something that the sellers may think that you're trying to undercut their price, right? So yeah, it takes like 6 months once, and it's a slow dance.
It's a slow thing, but like anything, if you're consistent with it, it will pay off. But normally, if you're dealing with larger multifamily, there's usually less of it than if you're dealing with like multifamily starting at 2 units and up. So it's one of those things where it just takes time. What mistakes have you made with this form of direct to owner marketing that you eventually corrected?
Mistakes. I have cases where I'm thinking what mistake. Probably not being consistent is a mistake. I have done a few, and the problem is once I do one deal, we are stuck on it for 6 months. We don't go and do any more marketing until we stabilize the first deal, and we go and do marketing again, right? So that's a mistake. If I've done it more consistently, I would have get a pipeline full of deals. But it's also situational, right? When you're new, you want to focus on your first deal, you want to get it right, and you are small, right? You can't be like hiring like assistants after assistant, which may not be possible when you're new, right? So I don't know whether it's a mistake or not, but that is something that if I've done more professionally, consistently, I would have got a lot more deals in the beginning. But as I said, I was new, and I'm not a guy coming in with hundreds of thousands of dollars into this business. When I started on multifamily, I started with single family, and I was so happy getting a 45 units under contract. So I forgot everything else. I just go and focus on one, and it took us another one more year to find another 174 units.
Okay, awesome. So you and Achieve are proponents of being vertically integrated. What other complementary businesses do you own or run, and how does that help you to minimize hassles and increase returns?
I wouldn't say whether we're a proponent of vertically integrated. We are vertically integrated because we want to do it. We are just so much value add guys. We want to have control on our assets, and it's just so much cheaper for us to do. And investors get the payback for that. That's why we are vertically integrated. What other things? We also have constructions. We also have a small mentoring program, education program for people to come and learn from us. It's a method for me to help others at the same time to deflect time wasters. right? So many people want to pick my brain, right? So when I tell them, hey, this is what if you want to take my time, which is a fair thing, right? You want to separate people who are serious versus people who are just kicking the tires and wasting time and not taking action. We also have our own Achieve Cares Foundation, which is our foundation to help orphans to get education. We have like 300 kids right now that we're helping on a monthly basis. And that's it, right? Yeah, that's the vertical integration of all our companies. We are so busy right now even with that. But our asset management, property management is the two biggest
Okay.
component of it.
Yeah, the property management is definitely something when you have that many units. When did
Mhm.
you take that in house? Was that a set number of units that you did it? Was it because you had issues with other third party managers? What was the
We did it
reasoning?
from day one.
Okay.
Day one, from first 45 units of multifamily, we started asset managing because 45 units is a bit hard to find a property management company because either they charge you very high or they charge you less, but they put you a part-time manager, which was not what we want. So we want a full-time manager. We just manage it ourselves. It's a bit harder work in the beginning, but we just continue building on from there.
Yeah. That's right in the space where you don't really need a full-time manager, but you
Yeah,
want one and it's not big enough yet. So kind of
correct.
forces you to find another deal right away to get some scale,
Absolutely.
right?
Well, it took us another one more year to find a deal, but it all paid off.
So you work with a lot of new investors. What mistakes do you commonly see new or experienced real estate investors make?
Oh, and even new and experienced investors, they look at numbers, they look at return, and they decide whether the deal is good or not.
Okay.
So that's the biggest mistake I see. Oh, this deal is this problem, that deal. Well, the biggest for me is all about the sponsor, right?
Mm,
So
yeah.
I can put whatever I want in my Excel spreadsheet. It's just an Excel spreadsheet, right? Investors doesn't know what is the assumptions going behind the Excel spreadsheet, and most sponsors wouldn't. They probably will articulate it, but investors very hard for them to really understand what are the assumptions, right? I mean, we can put whatever we want on Excel, but I think the sponsor has a good track record as being very communicative. You can align well with the sponsor, and you can see they have a business experience. That's the sponsor I want to go for because they have much better accuracy in their prediction compared to a sponsor who doesn't know what they're doing. And and you can tweak the numbers whatever you want just to raise the money, right? So that's the biggest mistake I see, investors. The second biggest mistake would be, investing with people who are not operators. I mean, there's a lot of people who are, in the general partnership. Some are operators, some are deal finders, some are property management companies. A lot of them are equity raisers, right? So sometimes we have been investing money with the equity raisers, and after some time they realize the equity raisers are not really the decision makers, right? So at least you have to. It's okay to invest with equity raisers just because they have the biggest channel, but you have to really know who is the operator behind the deal, who is the business plan owner, who is going to execute this, who's the real guy behind it, right? So at least you find him or find her and make sure that he is the best guy that you're really looking for to safeguard your investment.
Yeah. That makes sense. The other thing too about the sponsorship, just on top of that, is
Mhm,
I
mhm.
find with the wealthiest investors I work with, it's more of investing into the sponsor, not into the deal.
Yeah, absolutely.
So, and that's with I've changed my thinking over the past decade into thinking that way as well. When I have passively invested into different asset classes within real estate or other
Yeah.
assets. So it's definitely a huge mind shift because some people that like tear apart your Excel spreadsheet about stuff, and you're saying, okay, well, but it's really who's the person that, like you said, executing and what's their track record and what's their experience with what you're actually doing in that
Mhm,
class.
mhm.
So what factors have you and your team implemented in your life and business that have led to your success?
That's a very tough question because I still think that I'm too busy doing a lot of things. So we're trying to put in a lot of process and systems. It's just finding good deals and working hard to turn around the deals, right? So my wife is running the property management part of it. I'm running the asset. I'm very passionate about finding really good deals below market value, deals that we don't find. And once I buy it, her job is to turn around. So she's really good at turning around the property. So I think these two combination works very well. But we are like 2,000 units, 10 properties. So we are trying to build our corporate team well enough so that we can reduce our trivial time wasters. At the same time, we want to grow as well, but we want to grow
Okay.
elegantly.
Awesome. So how can our listeners learn more about you and your company, James?
My company is achieveinvestmentgroup.com, right? So ACHIEVE, like achieving a goal, achieveinvestmentgroup.com. My email is james@achieveinvestmentgroup.com. If anyone want to come and, just come to my website. If anyone want to look at how to invest, there's a invest with us or register with us button. You can click and fill up a form. I also have my own book, which is called Passive Investing in Commercial Real Estate. If you can see this.
Yep.
It's a best-selling book. We have sold more than 2,000 copies. Top 15 book by Jim Cramer. Jim Cramer, The Street, for real estate book in investing. And it's in Amazon, $20 for physical book. And there's an audible book as well. But for your audience, you can get my book for free if you go to this website called passiveinvestinginrealestate.com.
Okay.
Passiveinvestinginrealestate.com. You go there and get the book for free.
Awesome. Well, thank you so much, James, for being on today, and looking forward to connecting with you in the future. And I'll put all the links into the show and YouTube notes.
Absolutely, Charles. Thanks for having me. Hopefully, I really add value to your audience.
You definitely did. Have a great rest of your day.
Thank you.
Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.